Hello and welcome to BQ Prime. A very good afternoon to all the viewers. I'm Hiral Dadia. One stock that is in focus is RITES on the back of the first quarter earnings that have been reported. Joining us on the show is Mr. Rahul Mithal, CMD at RITES, to discuss more in terms of how has the quarter been and what's in store going ahead. Rahul, good afternoon and welcome to the show.
Good afternoon.
Rahul, my first question coming to you is overall, has the quarter actually met your internal expectations?
So let's break down the quarter one performance. You see, when this financial year started, our strategy was to minimize the impact of two major challenges. And one was the export stream revenue, and the second was the change dynamics of the QA, the inspection stream of revenue. So in the export stream of revenue, we started the FY with an order book of only 100 crores. And this has impacted my profits in this quarter by about 16 crores. In the QA inspection stream of business, the new order of railways started cutting in this quarter. And the rates have gone down by 1/5 from the previous rates, impacting more than 60% of my QA stream of revenue. So we tried to build up on our other client base, as also rationalize our cost. And this impacted my revenue, my profit by about 10 crores. So what we aggressively did in this quarter was maximize the effective implementation of our high margin project consultancy orders. So there, if you see, there's an year-on-year growth of 10%, and in fact, maintaining a overall consultancy margin of 44%. That, along with a growth of about 10 crores profit in my subsidiary RMCL, could minimize the overall impact in this quarter, is in line with our strategy to minimize and blunt the impact of these two challenges. And we could, limit the impact to about 19 crores in the EBITDA, while still being able to maintain a core EBITDA margin of about 29.6% and a PAT margin of about 21%.
Right. Point well taken, Rahul. So overall, if you have to look at FY24 as a whole, what's the kind of decline are you expecting in terms of the exports as well as the quality assurance revenue, and how much of it can be mitigated with other businesses?
You see, in the export stream of revenue, the kind of movement that we have seen based on our efforts across continents in the last few months, we are hopeful that we should be able to get a finite order as in the coming months, and the aim is to be able that these orders generate some revenue by the end of the FY. In the QA stream of business, we are trying to aggressively tap on other client base, so that, as I said, we restore and make up for all the lost ground at the earliest possible. With that, the aim is to cover all this by my high margin project consultancy stream of revenue, and to recover as much of lost ground in the entire FY. So if you look at the entire FY, the aim would be to at least come back to the levels on overall last year and secure my margins to the extent possible, which we have been able to do in Q1.
Right. And Rahul, overall, turnkey is another segment which is the largest contributor post consultancy. There as well, we've seen a degrowth of around 8 to 9% on the top line front, right? And as I was reading, it's mainly bad weather in certain regions that has impacted the business. When do you expect a turnaround on that front?
You see, turnkey, sometimes, yes, some of the projects got slightly impacted, but we have a healthy order book of about 2,700 crores, and I'm sure in the coming quarters, you will see a growth in the turnkey revenue. But having said that, if you see the quarter one, the bulk of the contribution, in fact, is in line with our strategy of having consultancy contributing to more than 50%. The consultancy stream contributed to 53% of my revenue, which is our core strength and which is our strategy and vision and direction moving forward. So even in the coming quarters, we will continue to focus on growth on the consultancy revenue, while obviously trying to execute the setback of some of the projects which got impacted in Q1 in the turnkey.
Right. So from here on, which segments do you think will be growth drivers for the company, number one? And where do you see the margins and the growth stabilizing?
You see, in order of priority, the project consultancy wing, both domestic and international, are will be our main priority. This quarter itself, as I said, consultancy gave us 53% of our revenue, and in that, international revenue consultancy was also about a 12% contributor, which is again within our RITES Videsh initiative. Moving forward, will contribute more in the coming quarters. Within project consultancy, the kind of orders which we've got about 60 plus orders already in quarter one across sectors. We've got the Hyderabad Metro consultancy order. We've got the Gurgaon Metro expansion DPR, the Chandigarh Metro DPR. We've got sustainability orders under Swachh Bharat Mission. We've got the comprehensive mobility plan for Kolkata City. We've got orders for ropeways for more than 10, 12 ropeways feasibility. And we've got orders for surveys for 4 different semi-high speed sections of Indian Railways. So if you see spread across infrastructure orders, we are getting these orders and we will continue to push them into revenue realization in the coming quarters.
Okay. So with all of these new orders, where does the overall order book stand as on date?
The overall order book as on 30th June is 5,700 crores. Consultancy is 2,700 crores. Turnkey is another 2,700 crores. Export is now down to only about 50 crores. And leasing is 150 crores. And my subsidiary RMCL is another 100 crores.
Right. And what's the plan with REMC from here on? Because though it's a small base, but it's good numbers that it has started to clock in and the kind of growth that you've been witnessing as well. What's the contribution are you expecting over time from REMC?
In fact, as you correctly said, RMCA has been constantly performing very well quarter on quarter. It's been constantly growing. This year, this quarter itself, it saw a growth from 28 to 43 crores in revenue and a growth in PAT from 14 to 24 crores year on year. It's become a debt-free company last year. It's giving dividend. It's given 90% of its profit as dividend. So moving forward, RMCL is showing a healthy pattern of growth. It has also finalized the first 900 megawatt renewable tender, the RTC tender, and I'm sure moving forward, RMCL is going to grow.
Right. And in terms of the first quarter of FY24, the company secured orders worth little over 300 odd crores. Is the company expecting to maintain the same run rate, or do you think it'll be way higher?
So you see, we got about 70 odd orders totaling to about 300 crores in quarter one. While the numbers of orders are high, but consultancy per se, the values of orders are normally small, unless you get some very big project management consultancy orders. Like, for example, Hyderabad Metro was a good order of 29 crores, our share of the order. So moving forward, the numbers are definitely this. We are going to maintain this trend, but our aim will be to even get some higher value orders, including some international consultancy orders. So even the total value of the consultancy order grows. Besides, obviously, targeting some fresh orders in export.
Right. And if you see in terms of the order book split as well, do you expect that to change, or will it remain the same as what we are seeing in the first quarter?
You see, the overall strategy for taking orders is based on our overall vision that consultancy must contribute more than 50% of my revenue, and turnkey should be limited to not more than 25%, because turnkey is a very low margin business and we are primarily a consultancy company. So in the interim phase till we get export orders, and as we get export revenue, the turnkey segment will further go down to come up to 25%. So keeping in view this overall mix of the revenue, the orders will be taken. Yes, turnkey orders are higher in value, but consultancy, we would aim in getting more orders and some high value orders so that we are able to maintain the contribution of consultancy revenue above 50%.
Right. And Rahul, my last question coming to you is what's the next milestone that the company will be looking to cross or achieve, if I would say?
So you see, we are I think our niche and our core strength is that whether it is in the PSU domain or the private sector domain, we are the only company which, except maybe oil and natural gas, we do consultancy across sectors, across infrastructures. So our vision is to be, build up on this and call the go-to consultancy company across client base in the domestic sector as well as the international sector.
Right. So that's with regards to the overall outlook. Thank you, Rahul, so much for joining us on the show and giving us those views. So that's the management of rights, clearly speaking to us in terms of how the quarter has been, what are the pain points, what could be the green shoots that you should be watching out for. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BQ Prime.